and see it's breaking over here. And that's when we get the sign to continue. Once again, we are retracing down, it's breaking it, and it's continuing up. So this repeats itself again and again. And we'll have the entries over here and try to go with the higher time frame order flow. Because when we are entering just on the higher time frame, let's say you're entering over here on the higher time frame now, you'll have a stop loss this big. But once let's say you have a stop loss which is 100, but once you refine that, and now you keep the stop losses based on the lower time frame, that 100 might come down to 30, which might increase your risk reward ratio by almost, I don't know, like 60%. Yeah. So all of this will be the internal structure based on the higher time frame now. Because higher time frame is bullish, but since the lower time frame is retracing downside, that's like the internal structure. So we'll try to just see one thing and just understand this for today, that this is bullish, and for it to become bearish, we need a break, and then we might have this. But this on the live chart will look like this. And this will be the main structure. So this obviously will be the main structure, which is just this. 1, 2, 3, 4, 5, 6, 7. And this over here, anything happening in the middle will be the internal structure. Okay. So that's the internal structure within the main structure. Yeah, clear?
Yeah.
So we'll take some more examples now. Like just look at this. That just right now how the price is bearish, right? And see, there was a trade here which you would have been taken, which you would have been able to take, just like this, because the market structure is bearish, and stop loss would have been above the previous structure, which is this, since we are bearish. And now once again, that would have been the TP. And now once again, since we are bearish, this can be, when you combine the candle, maybe this would have been your entry, stop loss above the previous high, which is the previous structure.
Like
And then
on what basis we are taking this entry?
So the market structure is bearish.
Yeah.
Right? We want the lows to be taken, because if the market structure is bearish, the lower lows will obviously be taken.
Okay.
Right? And since the lower lows is like the weak areas to be taken, that's where the market basically flows with. So we can obviously have like a confirmation along with it, like some candlestick patterns or something of that sort. And we always more than likely need the entry in the premium zones. So this is obviously premium, because once we see from this level to the downside, this will be the premium zone. Anything above this will be the premium area. So we want to be selling above the equilibrium, which is the premium area. And there's like a lot of things to combine along with it. And obviously in the live market, we won't be like selling this deep in the leg because this leg has been bearish for so long. So we obviously don't need to be selling over here because now the market might turn short-term bullish. Is because firstly, we are reaching a good level of, like a support. And second thing is that the HTF is bullish. So we are waiting for the internal structure to shift so that we can look for buys now. And that's what it's doing now. That once we break this now, we are bearish right now. Okay. So this is like the last point, last lower high. So once that gets broken, we can obviously look for buys. Okay. So that's how the overall structure basically plays out from bearish to bullish and bullish to bearish. So there might be a move where it can still come down, but just to be safe, we won't be selling so low that there might be retracements and might take us out that easily. Okay. This is clear? Yeah.
Yeah. I could understand the structure and the internal part, but I could not understand the entry level. Like, where do you take the trades in this?
So on the trading part will obviously come down later on, but the basic idea remains this. So basic idea remains that, okay, if we are bullish, we will obviously be trying to buy in the discounted area, which is the 50%. So this is the structure. Let's say this is the higher low and this is the higher high. And this is the equilibrium. So obviously below it will be the discount area. Okay. So this is bullish, right? So now this area is counter trend because it's coming down. So based on the lower time frame, it might look like this.
Yeah.
So all we care about is a break. So that now the lower time frame is getting from bearish to bullish. So it has become bullish now.
Okay.
And now we are looking for buys. So we just need to support the lower time frame with the higher time frame direction.
Okay.
Yeah.
Okay.
So that's pretty much the idea. And obviously there will be a lot of things along with it. We won't just like try to buy in middle of nowhere or random places. There will be order blocks, there will be inefficiencies, there will be supply demand areas and all these things to make more confluences with our entry and the directions which we might get along with. Okay. So more than likely this might be broken. So see, higher time frame key level, since this is higher time frame key level, because now basic like support level, higher time frame key level will equal lower time frame opposite momentum, meaning if the higher time frame area is getting approached by a lower time frame price action. So this is 5 minutes, right? So 5 minutes is getting approached on the H1 support. It will obviously have some reaction toward the opposite side.
Yeah.
So this is a trade right here, right now, which I might just take right now, which is so clean, is a buy just right here. And the stop loss here. That's it. That's like the trade. This will be the trade. And TP will decide because since it is counter trend now, based on the lower time frame, it's counter trend in nature. So we'll just see that how we can get along with it. But this is like the basic idea which we get along with.
Okay.
So look at the line chart. There is a transition in the trend. It obviously broke it. So even if it breaks by a pip, it's still counted. You see, that's like the break above the previous lower high. That's the break. Okay. And now, I mean, there will be obviously a lot of things such as this is inefficiency, this is the order block, which will come on later on. But even if you don't want to use them, you can just use structure in your favor. And since you know that now, you can just like have an entry after it's broken keep your stop loss below the low, and maybe like take 1:2, 1:5 just here. Okay, so now you have a trade which is
Okay.
with the high time frame direction.
Yeah. So, like, if I summarize it, we need to look at the higher time frame and see the trend, like whether it's bullish or bearish, and
Yeah,
what those they would be in those trending structures. There would be internal structure, which on
yeah,
the lower time frame would be alien to the higher time frame, right?
sure, exactly. Yeah,
And when in the lower time frame that structure breaks, we can take a counter trade for that.
yes, proper.
Okay, got it.
Yep. So that's pretty much it. What time are you free tomorrow, though?
Anytime you
Same
tell me,
time?
because
All right, I'll text you then. I'll
same
text you
time,
then.
morning, evening, anytime I'll find time because I can, like,
Perfect.
yeah,
So we'll catch up tomorrow, yeah?
yeah. Yes.
All right, perfect. Bye.
This is a good trade. इसमें तो वो बन रहा है.
Yeah, this is
इसमें
like a good trade.
yeah.